Yeah, good evening everyone. Welcome to webinar on GST annual return and reconciliation. Before we start the session, let's watch a small bite of FTCC.
The year when a dedicated organization, the Deccan Chamber of Commerce, was formed to encourage trade and commerce activities. The historical journey of the organization has witnessed great transformation as per the changing needs of the industry and businesses. The Federation of Telangana Chambers of Commerce and Industry, FTCCI, a legacy of excellence, voice of the industry, representing interests of over 25,000 businesses of all sizes, sectors and regions, is empowering industry and trade of Telangana state. A world leader in pharma, a global hub for vaccine, home to all major MNCs, leader in IT exports, and emerging first stop of India. FTCCI advocates a pro-business environment, caters to the needs of MSMEs, budding entrepreneurs, and traders through its advisory services in taxation, market information, industry-related issues, B2B connection. The Chamber has its nominees in the state-level advisory committees to help drive business productivity. FTCCI aids in providing certificate of origin for exporters, issues visa recommendation for business travels. The Federation imparts job skills through its dedicated skills center. It has adopted 14 government ITIs to improve the employability of students. With a uniquely global perspective, the FTCCI events reach a highly engaged audience, policymakers and stakeholders aiming towards Atmanirbhar Bharat.
FTCCI to work with government, tell us and guide us कि हम लोग क्या कर सकते हैं to remain competitive, to remain better than our competition. FTCCI for joining us, and I thank the office bearers of FTCCI for inviting me. Jai Telangana, Jai Hind.
Come and be a part of this dynamic and proactive organization. Together, let's realize the vision for a progressive future.
Thank you, Venkat. I request participants to post their question in chat box and will be answered at the end of the session. I now request President of FTCCI, Sri Meela Jaydev Garu, to give welcome address.
Thank you, sir. Thank you very much for organizing a nice meeting today. It gives me immense pleasure to extend my warm welcome to CA Mahesh Johar, speaker for today's session. My colleagues, Sri Suresh Kumar Singhal, Senior Vice President FTCCI, Sri R. Ravi Kumar, Vice President FTCCI, Chartered Accountant Muhammad Irshad Ahmad, Chair GST and Customs Committee FTCCI, Sri S. Chirmalai Garu, Advisor and Mentor for me and GST and Customs and Committee FTCCI. Dear participants, GSTR 9 is an essential annual filing obligation for all taxpayers as registered under the Goods and Service Taxes GST system. FTCCI is always forefront, is disseminating knowledge on the GST to our members and non-members, and organizing this webinar to provide the key updates, the GST annual returns and reconciliations like GSTR 9 and GSTR 9C as per the needs of trade and industry. We have designed this webinar bring before you, but practical insights and hope you will gain valuable insights and knowledge. I request all the participants who are not members of FTCCI, my request, please join the federation. You will get good benefit. The membership of FTCCI will bring forth all such events, and members will enjoy the host of other benefits such as discounts on delegate fees, performance, extra. Welcoming all the participants and speaker once again, I now request CA Muhammad Irshad Ahmad, Chair GST and Customs, to take the over for his introduction remarks. I thank you very much for joining all. Thank you. Irshad, you can.
Thank you.
Thank you, President. So good afternoon, everybody. President of FTCCI, Senior Vice President, President, distinguished participants, and my friend Mahesh Jawar, who is the speaker for the day. I welcome all of you for this important session. There is no better time than today, where we are in the middle of election season, and Mahesh will give a very good break from all this from all this hectic election activity. Let us dive into this knowledge session and understand what are the intricacies of GSTR 9 filing. See, one good thing about 2023 GSTR 9 filing is there is no withdrawals of any concessions that was given during the last year. So whatever concessions that were made available during the last year, and whatever pro forma format that was there for GSTR 9 and 9C is continued even for 2023. So this is a refresher session, and we are about to file our GSTR 9. It is very important for us to dive deep into this knowledge session and understand, refresh our knowledge on how to fill up these forms. And of course, I am hoping Mahesh will also get you some insights on shortcuts, some creative shortcuts you can use in filing GSTR 9, because we know we have different sources of data. You have your accounting system, you have your monthly returns, you have your own workings. So like you have income tax returns, you are getting data from various sources, and then you have auto-populated data in GSTR 9. You have data available in ITC liabilities and comparison statement, so on and so forth. So all similar data across all these sources. Now the question will remain, what is the correct data, and what has to be reported, what should not be reported. So, and then let me also tell you, any subsequent scrutinies and assessments by the department is primarily based on GSTR 9. So therefore, what is important is what we have done in the past during the last year. This is the best available option that we have to make some corrections there. Corrections in the sense, reporting not something different from what we have reported for in GSTR monthly returns, but if there are any gaps during the last year, we can fill up. This is an occasion where we can fill it up and report it in a proper format, just to make sure the system will not trigger any unnecessary online notices. So this is very important session, and I hope Mahesh will take you into the depth of GSTR 9 and insights of intricacies of this return filing. So we are also planning for 2 more sessions in the coming month, during the month of December, and we will try to go as far as possible in explaining furthermore intricacies as we approach near to the due date. As we know, the due date is before 31st December 2023. So we will try to make sure 2 more sessions are held on this GSTR 9 as well. And then we are also planning for another session on customs and foreign trade policy. So probably we will try to fix that session sometime in the month of December. So whoever is handling these customs issues and foreign trade policy issues, they can look out for this event and subscribe for this event. So with this background note, I again welcome you for this important session, and thank you so much, and all the best. Thank you. Over to you, Lakshmi.
Thank you, sir. A brief profile of our speaker for today's session. Mahesh Jawar is a founder of M. Jawar and Associates Chartered Accountants based out of Hyderabad and located at Tharmandal Complex. Currently, he is leading a team of 7 people and is focused on startup consulting, business and risk consulting, and indirect taxation. He has a deep passion towards teaching and is being part of various institutions, business schools, delivering trainings on various topics, including indirect taxation, governance risk, compliance, GRC, income tax, startups, litigations. He believes in teamwork and has a goal to make a holistic firm with a team full of enthusiasm. With that, I now request CA Mahesh Jawar to take over the sessions.
Well, thank you so much, President sir and Irshad sir, for giving me this opportunity of presenting on GST 9, which is the hottest topic right now for across all the taxpayers, because the timeline is very near, and the number of issues that we face, whether from disclosure standpoint or for that matter technical errors in the GST portal, are very unexpected that come up. So today I will put in all my efforts to drive this session in such a manner that the quantum of efforts and the time that you take while filing 9 and 9C is considerably reduced. There can be many other new technical errors or the glitches that can come up, which we'll be addressing in the coming sessions as it was told. So on that note, I think I would extend a warm welcome to all the participants also. And let's jump into the session. So let me just present the screen. Probably you can use the emojis that are available at the bottom to indicate if you are able to see, not able to see. If I'm asking a question, you can probably consider responding. If you have any doubts also, you can consider raising your hands, and probably once I'm done with a particular topic, I'll come back and I can check if anyone has any doubts and address your doubts in the systematic manner. So let me just do the screen share. So I just hope, since it's first time I'm presenting, can you just confirm if the screen is visible to each one of you?
Yes, sir, it's visible, sir. You can proceed.
Fantastic.
Very much useful, sir. It is clearly it is there. Thank you.
All right. Thank you for the confirmations. All right. So I would expect the participants to participate will be connected for next 1.5 hours. And during that 1.5 hours, I'll try to cover the key aspects, all the key aspects of 9 and 9C based on the brochure that was shared. And also I'll add on my insights, and I'll give you some tips and tricks also of how you can populate the data faster for closing the annual returns early. So first of all, here is there anybody who is absolutely new to the GST 9 and 9C? They have never ever filed 9 and 9C, heard of it but not filed. So you can probably okay, I think I can't see everyone, only panelist is what I can see on the screen. So I think I'll continue with that. The pattern might not suffice here. So I'll continue explaining. If anyone has any doubts, probably you can, Lakshmidhar, they can unmute themselves and speak, right? Even if they are not visible on my screen.
They can post in chat box, sir.
Okay, can they speak also?
Yeah, will be allowed those who have raised
the hands.
Yes.
Okay, got it. Okay, I see people dropping in question and answers. So probably use the chat box. I see Kavita Bansal. Okay, you have never filed 9C. Okay, fine. Fine. No worries. So I have designed this presentation in a manner that I'll give you a brief background about what 9 and 9C is also. Okay. And at the same time, I will take you into the depth of understanding the critical intricacies. What are the things that you should keep in mind? What is the information that you require? what are the problems that you can come across when you are uploading the GSTR 9 and 9C on the online portal as well. Okay, so I'll move on to the first slide here. Yeah, so let me just give you a brief background. What are the topics that we are going to discuss today? I'll give you a brief background about what is 9 and 9C, what are the provisions, when it is applicable, what circumstances, which type of taxpayer need to file, who don't have to file as well. We'll see what are the latest updates in GSTR 9 and 9C. For each clause by clause, I will explain you which of the clause that you have to fill up and which clauses are optional, if there are any merged reportings, etc., in a very tabular format. So we'll look into what are the latest updates that have been given in the form. Then we will discuss about what will be the input requirement that you will need for the purpose of filling GSTR 9 and the 9C. So of course, now all assessees, when we are filing 1 and 3B also, we have a defined checklist, or we have defined that this is the input that I will need for the purpose of preparing. When I say input, it doesn't mean GST input. I mean to say the data requirements, basically, that this is the data that is required for the purpose of preparing 9 and 9C. So when you have the data handy, it becomes very easy for you to prepare 9 and 9C. Then reconciliations, of course. 9 and 9C is, I can say, more than 70% of the work that is involved in GSTR 9 and 9C preparation is this only. The 30%, it is not reconciliation, but it will definitely require you to look into certain provisions of the GST laws. So there is this thing, right? Whatever errors have happened. So since we are discussing for financial year 22-23, which is due on 31st of December 2023, right? So in that scenario, what will happen is whatever errors, whatever non-compliances, whatever short payments, whatever excess ITC availed, all of these mistakes that must have happened during 22-23, 9 is the best possible return for you to rectify and disclose that data also to the government. Otherwise, we will face a challenge. I cannot say that confirmly you will face a challenge, but there are high likelihood of occurrence that the notices or intimations or litigations from the department will keep coming. So it's better that we identify that during 22-23 whatever has happened, let's revisit those provisions of the GST laws and do that in the 30%. More than 70%, as I said, key reconciliations. I'll give you what are the key reconciliations that you should do, why you should do, and what can be the probable implications if you don't perform that reconciliations also. I'll try to give you that. Then what are the important points that you should consider when you're filing annual return? As I said, we'll see that litigation, what are the things that provisions and all, key provisions that you should be looking into, so that your 9 and 9C is becoming a finalized returns, right? So when a scrutiny of returns is coming or a notice is coming under section 73 for you, then you are in a better position to reply to that in a timely manner also. Okay. Next, technical updates. So there are been not much technical updates as such, but whatever has happened, it will, if you know it prior hand, probably when you're preparing your 9 and 9C, you will know that. Otherwise, you'll have to first populate, upload, download the error JSON file. It consumes a lot of time. So we'll see what are the key changes that have happened in the Excel utilities that has been made available on the online portal. Then we'll see how to handle the differences and what are the common errors and other challenges. So I hope till here everyone is clear what are the things that we are going to discuss in the today's session. You can message in the chat box like a yes, no. I'll just drop a message there. Probably you must have got a ping. So can you just reply whether you're able to get through an understanding here about the context of today's session? Hello? I think I'm getting it in Q&A session. I'm not sure. Lakshmidhar, is it possible to enable them for the chat box? Because these questions will start piling up otherwise.
Yes, like you want them to make speak, sir, or chat box?
Either open and allow them to speak,
Yes, sir, we can.
keeping them
Those who had raised the
that
hand will be allowed to.
okay, sounds good because the number of participants are high, and reject all these questions that have already been posted here. And chat box is something I think you can open up for them to put the messages
Sir,
instead of
please
Q&A.
open for them, sir.
Okay, but I don't think they are able to message.
Okay, sir. Yeah, now okay, sir. The changes has been made.
Me too.
They can post.
Can you please confirm you have been able to follow till here, because it's important for me to interact. Without interaction, if I just keep on going, it doesn't make a meaning to me as well as to you. So
Yes,
I
sir.
would prefer having, yeah, now sounds good. Everybody is able to ping. Fantastic. Thanks, Bhanu. Thanks, Hanmant. Okay. So now let's have for those who have never seen 9 and 9C, let me give you a background with the help of provision. This is this is just a brief. What is a return? Always a question. What is a return? Like we are filing GSTR 1, we are filing GSTR 3B, we are filing GSTR 9, we file ITC 04, we file GSTR 9C. So there are n number of returns. Income tax is also a return. So if I have to give you a brief understanding what is an income a return means, you just have a look at this part. Just purpose of the return. Okay, so if I have to talk a return, it is nothing but it's a mechanism. Government has defined the formats wherein it is asking every assessee in this India that you please share me the information in this format. Reason is that when suppose I'm doing a business, if I'm doing a business, whatever transactions have happened, I have to pass on that information to the government so that government can review what activities I've done, whether I've paid necessary tax on that or not, and do whatever necessary implications is there from the tax collection standpoint. So if anyone asks us what is a return, basically it is nothing but it's a mode of transferring the information to the tax administration. And what is it being used for? It is used for compliance verification and finalizing the tax liabilities, provide inputs on the basis of policy decisions. Like we keep seeing, there are various amendments keep coming. Like the best example is the 2A, which has evolved like anything, and now it has come to GSTR 2B with no more credit apart from that. So how is this happening? As in when the data started flowing into the 2A, the policy decision making keeps changing. So that is how the return is very, very, very important. So if we think that filing a return is just like a disclosure and it is fine, no, it is not like that. There are many other aspects that get impacted based on the return that we are filing. I hope that makes now that you know how much the disclosure is important when we're talking about the filing of a return. So let me take you through the applicability of annual return. So this X mark which is there, it indicates that this provision is no more applicable right now. It was there earlier, now it is not there. Okay, so now yeah, now so you don't have to remember this. First of all, let me make it very clear. You don't have to remember this. This is only for your information and knowledge enhancement. If you have a scribbling pad, you can just scribble the section and you can go and refer it again at a later point in time. Section 44, subsection 1. This is the one which is said in the GST law that under this section is what the annual return needs to be filed. So who is supposed to file annual return? Every registered person. Then who is not required to file? These are the 5 people who are not required to file. So every registered person means everybody who is having a valid GST number is required to file the annual return. And ISD not required. A person who is collecting TCS under section 51 is not required to file annual return. Person who is collecting tax under section 52, that is, he is also not required to file an annual return. A casual taxable person, he is also not required. A non-resident taxable person is also not an annual return. Now, any person other than this is required to file the annual return? Your question is, I know that you are getting a question, sir, where is the turnover criteria? I'll come to that, the turnover criteria. So now first let me finish this section part. Okay, so they shall furnish the annual return, and this is the amendment, includes self-certified reconciliation statement. So if the X mark for this is that previously the GSTR 9C was acting like a reconciliation statement plus an auditor's certification also. But now auditor's certification has been done away with. Only self-certified reconciliation statement is needed. That's why an annual return may include self-certified reconciliation statement. That is, this may, I will explain you in the coming slide. For every financial year on or before 31st December, which we all are very well aware. Moving on to the next, that is the rule. What is the rule now? So now again, this 35 subsection 5 is no more there now, because this was pertaining to the 9C with audit criteria, which is now not there. Okay. Now rule 80, which says that every registered person, same as rule 44.1, nothing. As I said, you don't have to remember this. This is purely for your knowledge. Except the person mentioned in 44.1 shall furnish annual return. Sir, I am a composition dealer. What should I do? So in that case, GSTR 9A is actually the annual return. But let me tell you, or else what I'll do is in the coming slide, I have given a summary. In that I will explain, sir, 9A, is it really to be filed? Answer is no. 9A is not there in the GST portal. After GSTR 4 has been launched, 9A is not there in the online portal. If you are an e-commerce operator, then you were required to file 9B, which is not yet notified. So till now, till this form is not notified, you don't have to file the return in that scenario. So this is the interpretation that is coming from the provisions. So now, if you look at this summary here, the summary part, every registered person is required to submit annual return electronically in Form 9. But what you should remember is financial year 22-23, as on date, if I talk today as on date, based on the notification number 32/2023 itself, for 22-23, the exemption is given to those taxpayer whose turnover is less than 2 crores. So suppose an assessee is there and his turnover is less than 2 crores in 22-23, then he has an option to file a GSTR 9. It's not that he's not eligible only. He can file if he has done any errors, mistakes, or he wants to rectify something, then he can opt to file the GSTR 9. But there will be no late fee or the penalty that can be levied to that particular person if he's not filing the GSTR 9. And then every registered person whose annual aggregate turnover exceeds 5 crores will also file self-certified reconciliation statement. So there are two threshold limits that have been given in the rule. If you talk about the section straight away, there is no threshold limit that is given. Temporarily, since the GST is still evolving, so we can assume that after, in the next financial year, that is 23-24, without any turnover, everybody, all the assessees might be required to file the GSTR 9 and 9C. But when we talk about 22-23, there is an exemption which is given in this particular notification. So you should actually scribble this notification number, because there are auto-triggered notices which I have seen that is coming to all the assessees saying that you have not filed GSTR 9. So this is the notification that you can use, stating that as per this notification, my turnover is less than 2 crores. So I'm not required to file the GSTR 9 as a evidence to the department. Next. So section 44, as I said, no threshold is given there. Rule 80 also, no threshold that is given. Section notification 32 has given you the threshold of 2 crores. Okay. For the self-certified reconciliation statement, this is included in the rule itself. It says that 5 crore up to 5 crores reconciliation statements are not required. So if I have to summarize this, so first I'll just show you this slide. That is one more slide which is not so very important. So now this is the table. You can want to take a screenshot of this, probably you can take, or you can scribble on your notepads if you have. So the point number 1, a registered taxpayer with aggregate turnover of less than 2 crores. I'm saying less than. Okay, less than 2 crores, 9 and 9C is not applicable. However, you can choose to file provided if you have done any errors or mistakes, etc., or voluntarily also. Not necessary that you have made mistakes only, but if you have made any mistakes or errors, it is recommendatory that you file 9 and 9C and correct that in the returns here. Next, registered taxpayer, more than 2 crores but less than 5 crores. I'm saying more than 2 crores, less than 5 crores. Annual return, yes. GSTR 9C, not required. So that means here only 9 will have to be filed. When the aggregate turnover exceeds 5, sorry, this is not years, it is 5 crores. Then you have to file 9 and also 9C in that regards. Composition dealer, he is not required to file GSTR 9, he is required to file 9A. 9C, not applicable. E-commerce operator, he is not required for 9. He is supposed to file GSTR 9B, which is not yet notified. OIDAR and foreign airline companies, just for your knowledge, that is not very prevalent. Is there anybody who is into these type of segments, OIDAR or foreign airlines? No, none. Okay. So just for your knowledge, they are also exempted by this particular notification. Now, what is that notification? Just have a look. I'll not spend much time here. Just notification 30/2019. It gives exception to the person registered as OIDAR. Notification 9/2020. It gives exemption to the airline companies, foreign airline companies only. They are not required to file 9 and 9Cs. So this is not very prevalent, but however, if in a remote circumstance out of 200, even if for one it is applicable, probably it will be useful for them. So, okay. So this is about the applicability. Any doubts still here in the applicability? Okay, thanks Mangaraju, Kavita, Hanumant, Bhanu, representatives from Nile Limited. Fantastic. What is OIDAR, Khan? Probably it requires a very detailed discussion for that to explain. It's not a straight answer for that. Okay, fine. Chalo. I'll move to the next slides. I'll take if you have any questions in the end. So now, input requirement. What is the information that is required? Now, before we jump into input requirement, I just want to spend like a minute's time to run you through the format of GSTR 9 and 9C, the offline Excel utility. So just allow me a second. I will just download, and actually I'll just open that. I have it handy. Have every one of you seen the GSTR 9 offline utility? Be interactive. Probably it will help me address your questions. Just a moment. Composition dealer not required to file 9A. He is required to file 9A, but in the GST portal, 9A is not appearing. Only GSTR 4 is what is appearing. So that's why GSTR 4 is being filed there. Fantastic. Almost okay. Many of them have seen, and many of them have not even seen. But I can see majority have seen it. Kavita, you do it online. Format remains the same in the offline utility also. Not a problem. So let me just do that. I have stopped the screen share. I will resume that. Please confirm if you're able to see. I have resumed the share. Can you see that?
Yes, sir, we can see.
Fantastic. Thank you. Lakshmidhar, it will be better if you can keep confirming me the movement of my screen.
Okay.
And I don't want anyone to miss on anything. Okay. So this is the offline utility. Don't worry, it is a README file. So here all the instructions are given, the same which is available in this portal. Then this is the home page where you give the GST number, and here is what you have to select the financial year. So what you have to do is when you click on this, you see the new utility 2223 has been added. So when you select 2223 here, give your GST number here. Then this is the table for outward supplies, which we will see in the PPT also. I'm just showing you the look and feel how it appears. That's it. So this is how it appears when you will open an Excel utility. So here we give the data. This all the white fields is the place where we will populate the information. Okay. This gray colored will be either formulas or auto filled from there. So 4 and 5, these are the two tables which are relating to the outward supplies that we make. 6 and 7, these two tables which you are seeing, these are pertaining to input tax credit, ITC. Table 8 is a reconciliation of the 2A versus the input tax credit that has been taken in the table 6 and 7. This is the reconciliation there. Table 9, it is the reconciliation of the tax that is payable on the output supplies versus that has already been paid in the GSTR 3B returns. Okay, so this data will be populated again from the GSTR 3B. Next, table 10, it is giving us the option of disclosing the transactions that have been amended. Like suppose 22-23, okay, the transaction has happened in 22-23. We realized that the incorrect reporting has happened in 22-23. So what we did, April 23 to till 30th of November, that is October month's return, filed it till 30th of November. If we have made any sort of mistakes and we have amended, then those details needs to be disclosed in this particular table here. Next, the 12 and 13 is for the reversal. So basically I can summarize, put it straight. Table number 10, which is appearing here, is for the last year transaction, that is 22-23, amended or reversed in 23-24 financial year. Differential tax. So this here, based on the transaction of this 10th table, whatever is to be paid will come here in the payable tab, and we have to show it as paid or not paid and accordingly pay if it is needed. Then demands and refunds, like zero rated supplies you have applied and all. So in that case, what happens, you are having a refund that is to be received. The details relating to that needs to be disclosed here. We will look into the PPT when we are going again on this area. I will also be telling what are mandatory, what are not mandatory, what is the input that is required for preparing or filling up this table and all. We will have a look at that. Then here supplies from composition dealer deems. This is a disclosure table basically. So this has got no other implications as such. Then HSN outward and the HSN inward summary tables. So this is a brief template of the GSTR 9. Now let me explain what are the key changes. Input requirement first. Then we'll go to the key changes in the GSTR 919. Now, can someone tell me what is the basis that you should use for preparing GSTR 9? Please tell me the detail. What as per you, reconciliations, what is that reconciliation that you're talking? Input requirement. Can you raise, can I ask somebody to volunteer and raise your hands? We will unmute you and you can speak so that it will be more interactive. Everybody gets to know what is the industry practice also, since we are more than 100 people in this session today. Can you raise hands? So there will be a hand button, I think, in your screens, which you can use and raise your hands. So here, outward supplies as per 1 will be auto populated in 9, tax liability and ITC comparison if data is missed. So, but now tell me what should I take as a basis? Whatever has been filed in GSTR 1 and the GSTR 3B, that will come auto populated. Can I take that as a basis and proceed with the filing of GSTR 9? Kavita says no. How about others? No, you have to check with financial books. Okay. Rambabu says yes. Mohammed says 1, 3B and financials. Okay. Krishna says no. Reconciliation as per books. Okay. Now, what if the books and GST are 1 and 3B? Let's say in the financial statements, the turnover is around 9 crores 20 lakhs. But in GSTR 1, we reported only 9 crores. Now, which figure should I pick? I'm saying, I repeat, as per, I'll write it here on the screen. As per my books, it is, let's say, 9.2 crores turnover. Whereas in the GSTR 1, I have reported 9 crores. In 3B, it is, let's say, 8.5 crores. Which figure should I pick now? Corrected data we need to report. Administrator says 9.2 crores. We should consider as per books. Then how about the liability? Will it match? There will be difference na? Between 1 and GSTR 9. Need to pay now. Very good. Fantastic. No, you have to pay that where DRC 03. 9 is the amendment. We have to pay now. Okay. Cool. Got it. Fantastic, guys. You all of you have answered it the right way. We have to ensure after reconciliation. I'll not say that completely it will be as per books only. Now, why is that aspect? Now, before I'm jumping into input requirement, I'm telling this only. When you talk about this turnover, you don't jump that directly 9.2 crores is there in that. First, you have to bifurcate this turnover. What is this turnover? Because in the books, when you talk, there is the head called revenue from operations. And this is done as per accounting standards or as per Indian accounting standards also. So this figure can include non-GST transactions also. This will include non-GST and GST transactions as well. You getting my point? So whenever you start for preparing the GSTR 9, the first thing that you have to do is obtain the profit and loss statement, revenue from operations. Go and check what is the breakup, notes to account. Go to the notes to accounts where you will see this revenue is from trading of goods or trading of finished goods, service segment, interest on fixed deposits, sale of securities, miscellaneous write-off, like you have written off some debtors and creditors and that is appearing in your income, rounding of errors, etc. Okay, unknown, unidentified receipts, etc. Those all will come and sit in the profit and loss, revenue from operations and other income as well. Okay, so you have to first break down and bifurcate that this is GST related, that is, this is a supply as per section 7. Now there can be certain transactions, as I said, if it has been written off in the books, like government assistance you have received, etc. So what happens? As per Ind AS, you are required to show it as income. But does that mean it will be reported in GSTR 1? Not necessary. If it is applicable, only then I will report it in GSTR 1, like that. Foreign exchange gain or loss, maybe disclosure requirements. Those all you have to remove it from that. And when we go to 9C, these implications, this bifurcation will help in preparing GSTR 9C disclosure. Am I able to justify the explanation here? You're all with me? Is it being very complex? If it is, please raise your hands. I can answer your questions if you have anything. But trust me, if you're working on Ind AS clients, this is something very extremely important. You should prepare a working also, because these are the questions that are going to come from the department when they come for GST audit, or when they come for scrutiny of returns, or when they are reviewing your 9C. 120% this is going to come. So it is very important for you to understand this aspect. Others will become very easy, the other differential part of it. So basically what I'm trying to say is, if you're doing in 9C, you should have a little bit of understanding of accounting standards and Ind AS also, so that you can justify stating that, okay, this is as per Ind AS. Why it has happened? Department may or may not understand, but you have to make them understand. That will be the challenge that we can face. So till here, there is a starting point which I say is there. So it is important to do this bifurcation. Then you see what is the GST turnover. That ledgers you should reconcile with the GSTR1 and the GSTR3B. That will make sense. So if I assume that in this 20 lakhs, what is there, if it is on account of India's adjustments, then my 9 crores are matching. This is not matching. So I will go with GSTR1. This differential, I will report it and I will pay the tax if it is needed. Clear, everybody, till here? Fantastic. Okay, so now let me move to the next screen, the input requirement. So ideally, I'm not saying that this is the only basis. Okay, ideally, the details as per financial statements should be taken as a base for preparing 9 and 9C. Considering that the financials are prepared after the end of the financial year and necessary adjustments, provisions, and corrections, we are filing that. That's why financial statements, we should make it as a basis. However, you should not forget about what has been reported in 1 and 3B as well. Now, I have jotted down what is the key information that you will need. There can be other information that you may require. So the general information, what you should do when you're preparing a 9 and 9C is that if you are consultants, then probably you can leverage additional information of this one. And if you are from the industry background itself, then you should ensure that you're obtaining the list of all the GST registrations that you have. And whether they are active or inactive, you have to first check the status of completeness of all the registrations that you have. I have a question to ask. Now, let us say my aggregate annual turnover is, let's say, 10 CR per annum, and I have 5 registrations. I repeat my questions. I repeat my question once again. Please pay attention to this. I am expecting a correct answer. Let's see who answers it correct. My annual aggregate turnover is 10 crores. I have 5 registrations. And out of 5 registrations, 4 registrations are such they are having 9 crores of turnover. I repeat, total turnover is 10 crores, 5 registrations. Out of that, 4 registrations account for 9 crores, 1 registration accounts for 1 crore. Now, you have to tell me how many GSTR 9 and 9Cs I have to file. 5, sure. I change my question. Okay, Kavita says, okay, 1 minute. I've got some different answers. Fantastic. Krishna said 3. And I'm not sure there is a number here, 176 ending with, which says 1. Probably if you change your and get on with the name. Krishna says 4. Kavita says 1. Krishna Sharma says 4. Sagar says 5. Venkat says 4. And others. Mazu says 1. Ambati says 1. So is it possible to unmute yourself, Ambati, and please come online? Why 1? Khaza? Those who have said 1 or 2 or 3, can you please come up once? Later on, I'll come to people who have come to the 5 also. Quick. I want to understand your thought process, your interpretation. Are you able to unmute yourself to speak? Please volunteer. No, you're not able to unmute yourself. Okay. 1 moment. I don't think I have an access to unmute you also same time. Okay. I mean, that's okay. I think in the interest of time, probably we can't do that. All right. So the right answer to this question is that you will have to file GSTR 9 and 9C for all the 5 registrations, and it can't be only one single registration that you will file and leave it. The applicability of 9 and 9C is looking at annual aggregate turnover. Okay, it is not looking at only one registration turnover is how much. Annual aggregate turnover is what you have to look. That's why in the input requirement we are adding this, that you obtain the list of all the GST registrations that you have, and then you go ahead with that. It has to be pan wise. Yeah, of course it's pan wise now. So even if you have 5 registrations across different states, you will have it on a single pan. Only the starting 2 digits and the last couple of digits will change. Pan will remain same, Kavita, for that. It's like that. Okay. Next. No, single doesn't work, Kavita. You have to file for all 5 different registrations if it is there. Even if it is nil, out of 5, let's say 1 registration there is nil, still you have to file 9 and 9C for that particular registration. Questions will be there like how do I prepare? Then you have to maintain separate trial balances for that. You will have to bifurcate all the revenues, input credits that has been taken, etc. and then report in the respective states 9 and 9C. Next. So you can obtain here the details like this. That is the importance. Why we are obtaining the details of registration is this. Because many a times assessees miss reporting in the 9 and 9Cs of those, assuming that there is nothing in that, not applicable. No, it is applicable. You have to file the nil return also if it is needed. And a list of products, just review this thing. Trial balance, please review that. Financial statements, obtain financial statements and review all your financial statements. Even if there are certain transactions not captured in 9 and let's say in 1 and 3B, please review that from a fresh angle and see if there is anything that you need to disallow. Please disallow it in report, disclose it in GSTR 9 and do a reversal in the DRC 03s. Keep this all documents handy for yourself. Other information, detailed workings of the figures from GSTR 3B and the GSTR 1 you should obtain. Obtain the sales register also. Sales ledgers also you should obtain separately. Don't rely only on sales register. Reason you may ask me why we should not rely only on sales register, because sales registers is nothing but it is a report. Understand that it is a report that is generated by the software. Okay, sales ledgers is something that is indicative of revenue recognition. So please rely more of it on the sales ledger than relying directly on the sales register. You can use it for the matter of your help. Next, obtain the details of export sales, sales register, export sales, and obtain details of credit and debit notes. These all the information will be required to be reported in GSTR 9 once again. Okay, that's next. Then we have seen one table where it was asking the details of refund, claimed, received, rejected, and pending. That is also additional information. Please prepare that and keep it ready before you start filling the GSTR 9. Next, the details of demands, if any raised during the period, you have to obtain that. So it's a bifurcation here actually. Read it properly. Extract all these ledgers, all sales ledgers and other income. I was explaining you in the introductory slide here, no, in the contents, that you first take the revenue from operations and other income, drill down, go to the notes to accounts, find out what are there, go to the groupings and the ledger level, then obtain all those ledgers. Okay, then you do the reconciliation with the GSTR 1 and 3B. Otherwise, it doesn't make any meaning at all. Don't do the reconciliation without doing this step. 100% you should perform it in this manner only. Then comes output liability ledgers, input credit ledgers, reverse charge mechanism related liability and input ledgers. These are the key information. This is one of the key informations. Okay, so you can probably make a note of this. Next, this is something that you have to prepare, reconciliations. So there are always 3-way reconciliations. I'll explain you through a diagrammatic format also in the upcoming slides. There should be a 3-way reconciliation to keep it very, very crystal clear, to make it very crystal clear for you. So you can make a note what kind of or I can say what type of values will require reconciliation. Number 1, you can make a scribble. Number 1, taxable value. will require a reconciliation. What reconciliations also I'll tell you. Taxable value will require a reconciliation, number one. Number two, CGST, SGST, IGST, output liability. CGST, SGST, IGST, output liability. They are the ones that will require reconciliation. So taxable value, CGST, SGST, IGST, output liability. These are the 4 figures in the outward side that will require reconciliation. Same coming to the input side, CGST, SGST, IGST, input tax credit. All the 3 heads will require reconciliation. Next, RCM related input tax credit, they will also require a reconciliation. Now, so these are the heads which will require reconciliation. Now, between what two this will require reconciliation is the next question. So, taxable value, this one, if you look at this one, taxable value, 3-way. This is something which will require a reconciliation with books, that is revenue from operations, financial statements, ledgers, sales register, then comes to GSTR 1 and GSTR 3B. This is the reconciliation here. So here it will be books versus GSTR 1 versus GSTR 3B. Okay. Next, I will add on one more here. It will be versus GSTR 9 because this will come auto-populated. Okay, this will come auto-populated. So these many reconciliation has to be done for taxable value. Same will be applicable for taxes also. From the books, you will extract the ledgers. Ledgers will reconcile with the liability appearing in R1, R1 with 3B, 3B with GSTR 9, which is getting auto-populated. All the others also same. ITC also will be same. Books versus 2B versus 3B versus 9. It will be like that. So 3-way, 4-way, 5-way, it is like that. So what you have to understand, R9 is any which way is coming auto-populated from R1 and 3B. So there will not be much of variation. I'll give you key segments where you can come across there is a variation between R1 and R9 also. Okay, there will be instances where you have to come. So that's how it is. Next, input tax credit registers you have to maintain. So I think this is clear, no? Reconciliation, taxable values and taxes, taxable turnover as per financial statements with GSTR 9, input tax credit as per books with GSTR 2A/2B. So this is still a question mark, but I am of the view from my personal point of view. I think it should be GSTR 2B only. Reason being, 2B was implemented in 22-23 for the full financial year. All input tax credits were also being taken based on the GSTR 2B only, and the variation was not kept with the 2A. So, but the terminology that is used in the GSTR 9, that is in the table 8A, is still 2A. So we are not sure what data is going to populate there in the GSTR 9 table 8A. Once we get the data, we'll get to know. Probably in the upcoming sessions that you have, we should be able to get the clarity till that time. But it should more or less be in the 2B. It is what my point of view is there. So we have to wait and watch for that timing. Next, so you have to obtain all these details, and later on, what you have to do here is input tax credit register, which is containing the GST number and all. You should just for the purpose of documentation. Then details of the breakup of the GST reversals, if any made during the year, you should obtain those details as well. Then this is the information. Okay, do you want me to be here? Please, if you want to make a note, you can make a note of this. Suresh, GSTR 9 format is not ready. No, it is ready. It's available in the portal already. 1 minute. HSN. Suresh, I'll answer your questions regarding mandatory or not. Madhu made a mistake in one. Is there a provision in 9 to rectify? Yeah, there is a provision. You can rectify with payment of necessary interest and penalty. IGST refund received exports have to be reported. I'll show that Venkateshwar know how to report that. Of ITC, it will be 2B or 2A. HP, I'm not sure, the name is not there here, but reconciliation, as I said, my personal view, it should be 2B only. But let's see first how table 8 is coming. Based on that, we have to report. GSTR 9 is ready. Yeah, that's it. I think I have answered your questions here. Okay, so can I please proceed to the next slide, or you want me to give you a minute's time? You want to make a note of this? Nile representatives from Nile Limited, probably I'll just show you in the coming slides about the mandate or not mandatory. Please be connected till the end. Yeah, I'll be coming to that. Yeah, moving on to the next slide then. So now this is the return related information, dear everyone. Return related information that you should download GSTR1 from the online portal, download 3B, download the 2B statements and the 2A statements equally simultaneously. Tax liability and all other ITC comparison sheets also download. Credit ledger, cash ledger, liability ledgers. Please see to it that all the ledgers are reconciling within itself with the books of accounts, everything. Okay. And annual return of previous financial year also you should obtain. Reason is you must have disclosed certain transactions in last year, stating that this has been taken in next year. So that's why it may require certain adjustments for you. So please obtain a last year annual return in current period. 1 and 3B of current period, again, you have to obtain that also. Reason being that in the table 10 and 11, you have to report the transactions for which the credit has been taken in the next year, like for 22-23 reported in April to October returns, like that. Then probably you should also obtain DRC 03 for the taxes that were already paid and identified. Okay, that is something that you should obtain equivalently as well. Okay, this is again very, very, very important. Reason being that this is the data that is actually there with the GST department. So reviewing this, all the sheets is very, very important before filing 9 and 9C. So I'm just leaving it for 30 seconds. Please make a note, take a screenshot or anything. Presentations will be shared to you after the session is over. Don't worry. This has been designed for you all only. Each one of you. FTCCI is working very hard towards bringing out the latest amendments and updates to you all. So those are not members, of course you should join and be a part of FTCCI. A lot of sessions and webinars are actually taken up here.
Thank you very much, sir. Very good suggestion to the members.
Oh, pleasure, sir. So this is the fact, sir, because the FTCCI has been pushing a lot of information, a lot of excellent content, bringing industry experts on board to share their know-how, and also
is doing that job, sir, this year.
Yes, yes, definitely, sir.
Thank you, sir.
All right, so I will move on to the next slide then. This is over. Now, let's have a clause by clause look at what are the key changes that have happened in the GSTR 9. So as at the inception of the session itself, Irshad sir has said that the comfort and the benefits that were there in 21-22 have been extended to 22-23. Let us just refresh that once again. This is a summary of form GSTR 9. I will show you in the tabular format also. Let's go to that instead of this. That is more pleasing to see. Only one point, just see this striked off. Part 5, auditor's recommendation on due to non-reconciliation is no more applicable because of the change in the provision. It is self-certified only. Okay, next. Now look at this, understand the format. I will show you what are the key changes that have happened here. Now clause by clause I will say. B2C, this particular clause, it is mandatory. B2B, mandatory. This is mandatory. Mandatory means if it is applicable to you, then 100% you have to report. Okay. Supply to SEZ, mandatory. These all are mandatory actually. There's nothing optional in this table. All are mandatory. You have to report if the transaction is applicable to you. B2C, B2B, these are all supplies. Okay. Till here. Deemed exports. These are all supplies. This is if the tax has been paid on advance. So as per the latest provisions, tax is payable on advances only in the case of services. So if you have received a service sorry, if you're rendering services and you received an advance, then you have to pay GST on the advance. Like that. And this is for inward supplies, and the credit notes and debit notes relating to that. You have to report it here. So these are all mandatory fields, same like it was there in 21-22, same continues for 22-23 as well. Next, as we discussed, table number 4, if you see this 4, and here it is 5. Okay, so this is all relating to the outward supplies only. Again, all the fields in this are mandatory if that necessary transaction has happened to you. Subject to. Let me show you that. Subject to. Now, here, government has given one benefit here. Okay, let me show you what is that benefit. Now, you read this. Exempted, nil rated, non-GST. Between these three, for financial year 22-23, non-GST supply, okay, registered person shall report non-GST supply, that is 5F, this one, this part, okay, separately. That means this is individually you have to report. These two tables you can report only here, exempted, if you want to. If you are able to bifurcate. But if you're not able to bifurcate, then he's giving you an option that you can report only in the exempted category. So here you can see you'll have an option to either separately report this in the exempted and the nil rated supply. So this is the one exemption that is available to us in the outward supply category. Is it clear to everyone here? Is it clear, all of us? Just see if we can allow the attendees to speak. Actually, I think it will be the best thing that can happen.
Yes, sir, we can allow those people who has raised hands to speak, sir.
Can they not unmute themselves and speak if required?
No, sir, because the participants are at large, no, sir. There will be disturbance.
Got it.
We can make that, sir. Like if anyone would like to speak now, we can tell them to raise the hand such that we can unmute them. We will allow them to speak.
Is there anyone who wants to speak? Any doubts still here?
Yeah, they can raise the hands. So we'll allow you to talk.
Because continuously, if I keep on speaking, they will get bored. Even if they have any questions and all, they have to wait till the end of it. Shrikant, do you want to speak once? Raise your hands, those who want to speak. I'll allow only 4-5 people now at this moment because I want to break the continuous flow.
Those who have raised, just interruption, sir. Those who have raised, they can unmute and speak. Please do that. Anyone has any doubts?
Hello.
Yeah, Ambati. Yeah.
Yes, this is Ambati from DCS Limited. Because we are importing the material that the reflection is not coming on the same month, and the ITC can be availed on the same month or to postpone for the next month.
Yeah, this is altogether different question actually. Not pertaining to 9 and 9C. But now that you have asked the question, the answer is that you can take the credit on that. And you'll have to, the department is aware of this issue. So there are challenges every importer is facing because it's not coming on timely basis. But I would advise you to keep the jurisdictional officer also informed about this particular issue that you're facing.
Okay, but that if suppose if the purchases related to the particular financial year, can we avail it in the particular financial year, or can we shift it to the next year? What do you suggest?
No suggestions as such, but what is the law? I can tell you that only. As per law, you have to take as per 2B only. But imports IGST is very high. So probably it's better to keep the jurisdictional officer in the loop before you do any thing.
Okay, thank you.
Probably, yeah, we can connect after the session. Once this is over, here only, if you have that question, we can look into it. Anyone has, please ask doubts specific to 9 and 9C only, so that since the majority of us are there here, nothing related to litigations and all also. I know there are many notices, but Pankaj, that's something that we can connect offline.
Hello.
But 9 and 9C related doubts, if anyone has.
Yeah, hello.
Yeah, Shrikant.
Yes, sir. Just two doubts are there.
Yeah.
If we report in exempted, all the related non-GST supplier thing, the department may ask to reverse the ITC based on the turnover. That is
They will
one
definitely
point.
ask you, Shrikant. Definitely they are going to ask.
Then that too, how to deal, sir. That another one is in table 10, sir. With respect to reporting of amended figures of last financial years. With respect to this, their department is providing the note, giving the notices with respect to this, sir. Because they amended so and so, though we have amended and corrected correctly, but they are issuing the notices seeking that you are not disclosed in the last year turnover and you are not reported like that. They are giving under section 74 misdeclaration. You are hiding suppression. They are giving just to in the coming slides. Please explain on it, sir.
Yeah, no, irrespective of the notice, see, if a notice is coming, you justify whatever is there, but reporting doesn't change. The reporting will have to be done in table 10 and 11. That is for sure. So if the department is not able to understand, you have to justify why we have reported and all, how it has been impacted, etc. That's it.
But after giving the working sheet also, they could not able to understand, sir. With respect to specifically state tax officer, they were facing the issues.
I understand that. But anyway, Shrikant, the reporting will have to still remain in the GSTR 9.
Yes, sir. Please, if you have any suggestions, please give in the comment section on this point. Thank you, sir.
Done. Chalo. So that's it. I think we'll move on now. Again, I'll give some time after running through a few more slides. That time, probably, if you have any questions, feel free to ask. So again, for the credit notes and debit notes, if you look at the red colored box here, one moment. So credit notes and debit notes. These credit notes and debit notes that you're seeing in the 5H, 5IJK, these are nothing but the credit notes that you have reported for, let's say, export without payment of tax, that is non-GST transactions, SEZ without payment of tax, etc. So for financial year 22-23, okay, I am not saying this, the notification is saying this. Registered person will have the option to fill table 5A to 5F. This 5A to 5F, you can report net. So let's say 100 rupees is your gross turnover, 10 rupees is credit note, 90 rupees is your net turnover. You can report 90 rupees in the table, this in the 5A to 5F. Again, to add on my opinion or my advice, it would be that don't report net, preferably. Okay, try to report it bifurcatedly, because at the time of departmental notices and all, it will be very challenging for us to explain this to the department, what has happened, why, etc. all that. So it's better you disclose it in a two separate manner. Okay, that's the another benefit that is there. So this has all been given the latest notification that was issued for extending the benefits of 21-22 to the 22-23 financial year in GST 9 and 9C also. Next, the details of ITC availed during the period. So we have moved out from the outward side. We are now entering into the inward side. Okay, that is ITC side. So as we are aware, above 6B, above this, there will be one more thing called 6A. That will be auto-populated from GSTR 3B. Then what you have to do is you have to do a reporting of that in the bifurcation in this manner. Like, for inward supplies, how much is the input credit? And that too, inward supplies needs to be bifurcated as received from unregistered, how much, from registered persons, how much, which is liable to reversal. That bifurcation is needed. One important point that you have to note here is that here a bifurcation is needed between inputs, input services, and capital goods. Okay, for all the heads that is there, inputs, input services, and capital goods, you have to do the bifurcation and do the reporting. There is one exception to this also. I will show you in the next coming slide. Okay, so this is the place where you report all the ITC. All are mandatory. Remember, all are mandatory, nothing optional. You have to report. If a transaction is applicable to you, then mandatory is what I mean to say. Okay, if a transaction is applicable and optional, I'll mention it separately. Next, import of goods, import of services, and this one. So till here it is input related details. So whatever is coming in 6A, the breakup of that. Next, amount of ITC reclaimed, you have to report it here. So ITC reclaimed, it can happen in the scenarios like, let's say invoice has come with a delay, so you have reclaimed it later point in time, that you can disclose it here in this particular tab. Tran 1 and Tran 2, I think it's now over already. In the initial period it was there, now it is not there. So this is something which will ideally not be applicable. Any other ITC availed but not specified above. There can be instances where, let's say, the ITC 03 must have been filed by you for a legal entity transferred from one to another. So those kind of transactions, what happens, you transfer the input from one registration to another, which will not come in the GSTR 3B. It will come through some ITC returns. So section 18, special transactions. So this can be reported there, which is very rare as far as I understand. But still, there is a reporting pattern that has been given here. So this is with respect to the ITC. Now let us look at what is the exception to this rule: input service, and the capital goods. I hope you are loving the transition. Now look at this one. For financial year 22-23, what has happened here is that for financial year 22-23, okay, sorry, for financial year 22-23, the breakup of input tax credit as capital goods, and so what you have to do is, capital goods he has to report mandatorily separately, and he will have the option to report the breakup of input and input services under the one head, inputs only. So I'll summarize this. We have inputs, input services, and we have capital goods. This is mandatory, separately you have to report. These two can be clubbed into inputs. My suggestion again, try to report with the breakup as much as possible. Input separate, input services separate, and capital goods separate. But I'm giving you the position of the law that as per the notification, this position is still available. If you are not able to bifurcate input on goods and input on services, report it in goods. But for capital goods, you have to mandatorily report separately. That is the breakup or the understanding that you have about table number 6. So here all inwards applies, reverse charge, import of goods, import of service. Each line item has to be disclosed separately. Tran credit we have already seen. That's the thing. Next, if you move on to the table number 7, again, all are mandatory again, if applicable to you. Okay, but there is again an exception. I mean to say that there is a notification again which has given an easy method of reporting that. What is that also? Let me just show you. Here again he says that if we are not able to disclose transactions separately, okay, we can go and report that in one single head. There will be one single head. I'll just show you in this Excel sheet. 1 minute. Are you able to see my Excel?
Sir, it's visible.
Yeah, thanks. So you see this 7H1, this one here, other reversals. So let's say you're unable to report in 37, 39, 42, 43, 17, 5. Okay, you can come down and report it in here, 7H1 other reversals, which is also fine. Again, suggestion would be prefer always to report in the clause, respective clause only, because if the department depends upon the officer. If they're not willing to understand what we are trying to say, it is very difficult. They'll be very particular that you have to report here only, because it after filing new rules comes, new verification provisions come for them, new circulars or something internal for them, wherein if they have not disclosed, go ahead, it becomes a problem. So that is the point. So no doubt we have a notification, but it requires additional efforts to explain them regarding this. So is it clear till here, everyone? Suresh, no. Yeah, yes. Fine. Thank you. I'm really loving. Thanks, all the participants. Since you are responding, it is easy for me to understand if I can go forward or not. Very rarely this happens in virtual sessions. Physical sessions, everybody does that.
Hello. Hello.
Yes, Kavita.
Yeah, very good evening, sir.
Good
I
evening.
just need to know when I was doing this 6A as you tell 6B the part, and when I have kept this reversals also in 7. So when in 8, while coming to 8, that was not reflecting. It is reflecting only 6 all table only. The total of the 6, not the reversal of 7. It was not showing.
Correct. Understood your point.
Did you understand? Like मैंने जब डाला ये 6A 6B मैंने पूरा fill up किया, 6B वाला part मैंने पूरा fill किया, and reversals मैंने 7 में डाला, but when it came to 8 वो subtract होकर नहीं आ रहा था. It was coming only again the same thing. Only the totals of 6 it was coming in 8, not the 7 का reversals reduce होकर नहीं आ रहा था.
समझा मैं आपका point. ITC available but not available, but ineligible. And,
like the other part will come, na, the summary of it will come in 8, na?
Yeah, I'm aware. We also face this issue. But what happens is here, the amount of ITC that you take in 3B return, na?
Yes.
So if you look at the current pattern of return filing, whatever is appearing in 2B, first the entire gross amount is coming in all other ITC. Okay.
Yes. Yes.
Minus from that the credit notes or the reversal that we are doing is being done. So what government was expecting in that manner only earlier, but this 20 to 23 years onwards, I don't think you will see a challenge when you fill this table 6 versus.
No, for 20 to 23 only, I'm telling you. I've already filled it 9, and the challenge which I was facing is the same thing. In 6,
So
in 6, I've taken all as per 3B, whatever data we have done, and as per my book, 3B, I have done it correctly. And reversals I've taken, I have filled it in 7. But when it came to the part wherein autofill data will come, and then our data will be calculated as per, but it is only showing me 6 data, not.
Yeah, it will show only 6 only. I'm also aware of this fact. It doesn't consider the table 7 related data being populated in the table 8.
Then,
but my question to you is.
So what about the reversals and what we have done?
My question to you is, you have to now compare one thing here, that in the table 8A, what is the data that is coming? In the table 8A, does it include your credit notes and all also?
No, the reversal point is reversals are not showing me over there.
In table 8A also it's not coming? Is it coming gross or net?
It is only coming gross, like where in 6, whatever it is there, it is showing me that only.
Here it will come gross, I understood. What I'm saying is table 8A.
In table 8A means you're saying, okay, table 8A is the auto-populated one you're saying, right?
Yeah. Is it coming gross or net at this moment?
Net.
It's coming net.
Yes, that is my issue. So where, suppose over there it is showing 3 crores 22 lakh. So taken 3 crores 22 or more, lesser than that also it is showing me more because of that auto population of 6 ka data what it is coming.
Got it. How about the figures appearing in table 6A? Is it the gross ITC or the net ITC? Net of reversals?
No, gross it is coming. In 6, whatever it is there is gross it is coming. If I'm filling the data as per say, what it is saying is as per other B and above, whatever we have done in 3B, it gets auto-populated. No, so that only it is working out here. Not the reversal part is not taking. And if suppose I less the over here the reversal part and I don't show it in 7, will it be okay then?
No, so I understood your point. When you talk about the disclosures here, first of all, in the table 6, when you're talking about this table is basically a breakup of what is appearing in the table GSTR 3B return, that is
Yes,
6A.
yes. Yeah.
Okay.
Yes.
So let us look at each table separately right now. Table 6A, this breakup should mandatorily reconcile with the amount that is appearing in the table 6A.
Yes.
First thing. Table 7, when you're talking about table 7, here you should report the reversals that have also been done in the GSTR 3B
Yeah.
and the one which you're trying to do the reversals now.
Yes.
This issue is there. I'm aware of this. Even in the last from 17-18 onwards, actually, this has been there where it was not reconciling. So either of the tables you'll get a difference, one or two, or either
Yes,
in
that
table
is what
6
I'm
or
saying.
7.
It is getting difference. Although my
So-
accuracy is lesser than what it is there in 2B that auto-populated, but still it is showing more.
Understood. So
And
my
as soon as
suggestion,
I will be filing it, I'll get a notice. That is also I'm sure.
that is, of course, wherever there is a variation, there is a notice.
Yeah.
So, but what happens is you have to fill the table 7 also. Why? Because this figure will somehow flow to GSTR 9C. So this table 7 is important to be filled up. And at the same time, in this table, probably I'm not sure. First, I need to understand the root cause as to why it is coming. Is it purely on account of reversal or some auto population also is an error or issue, something in that type? But in either of the one tables, probably you will see that the difference will be there, Kavita, which is a fact that is there. And this will require a justification only, or when you're filing GSTR 9C, right? In that you give a proper explanation in that, what has happened, etc.
Okay, done. Right. Thank you.
So here, as we were discussing, I think we discussed at length, table 8A, there will be auto population of the ITC that is going to be there. And here, this data will flow from the table number 6 that we have seen earlier. Sorry about this. There's a lag. Next, then you should report this particular data here, like this is the amount eligible or ineligible, and this is something that is available but not available, and import of goods, and here the difference should be effectively 0. So table 8, when I talk about, this is nothing but 2A versus ITC availed. This table indicates this. Okay. And this table is ITC reversals. Same is the case with the table 6 is nothing but 3B versus breakup as per the books. The GSTR 9 return flows in that particular manner. Suresh, as I said, we will have to see table 8A, the breakup of table 8A, how it is flowing. I'll not say 2A or 2B instead. It's better to use the term table 8A. You have to do the recode with what is appearing in table 8A. So that data is getting pushed in some logics and manners, which will be this year. We should expect that it should be as per 2B, but the nomenclature remains as 2A. So again, it's a bit a point of discussion that is going to be there across the industry for that matter. Ashok wants to speak. Lakshmidhar, can you please unmute him? Ashok Yadav.
Hello.
Yes, Ashok.
Hello, sir. I'm audible.
Sorry, you're not audible.
Hello.
Yes, this is not Ashok. It's someone else.
Yes. I'm Dee, sir.
Yeah, go
Hello?
ahead. Yeah, go ahead.
Yes, sir. Sir, I have the ITC adjustment regarding 21-22, sir.
Okay.
21-22, previous year ITC adjustment. I have disclosed in 22-23 some months financial, some months I have adjusted in any month like September audit adjustments like for the financial year 21-22. Now where I have to disclose, sir?
Very tricky question, huh? This is depends on a lot of factors. Let me give you a few examples here. Sorry, I didn't get your name.
Jayashree.
Jayashree. So there are a lot of factors that you have to consider where to report. Okay. So let's say 21, 22 input credit was taken in GSTR 3B of 22-23. Now,
Yes, sir.
depends upon the reason as to why that has happened. Now, let's say 21, 22, the transaction was accounted in the books last year. Number one, the transaction was accounted in the books last year, appearing in your 2A of last year. Okay. And it is only taken in the 3B of current year, let us say. Okay.
Yes, sir.
It will have to come. 1 minute. Let me take you back to that table. This will come and form part of this breakup here itself. Okay. And you will see that there will be a variation in the table 8. Why? Because it has appeared in the 2A of last year only. It will not come in the current year's 2A.
Yes, sir.
And last year, you must have reported that as ITC availed in the next financial year. So the table 8, whatever is the difference that you will see at the bottom, it should reconcile with the table 10, 11, 12 or 13 of the last year. 1 point. I hope.
Okay.
Number 2, let's say that you accounted the input in the last year in the books of accounts. It did not appear in 2B. That's why you did not take, let us say. Okay. And that transaction is appearing in the 2B of current year.
Yeah.
Bit confusing, isn't it?
Yes, sir. Yes, sir.
It is. It is. Why? Because the answer is not straight to this. It depends upon the factors and the circumstances under which you deferred that credit to the next year. Okay. There can be n number of reasons to it, and based on that, the revert changes should happen. Wherein you can also use the facility of table 6M. Yahan pe. Any other ITC that is availed, not specified above. Why?
Okay. I
Because
have to disclose here.
I'm not saying here only. You have to go with the circumstance. Now, what happens here is, the moment I report it in this table 6, it will immediately go and hit my table 8 because it's not appearing in 2B, and you'll get the notice stating that why have you taken this credit in the current year and all that story, and you'll not be in a position to understand. So even if I tell you, you go and report here, you will at the end of the day say that, Mahesh, in the session of FTCCI, he told me to disclose here. No, I'm saying you look at the circumstance. And if you're reporting here, look at the implications also that you are going to have it in the table 8. Getting my point?
Yes, sir.
No? Sure?
Not for sure, sir.
Answer is not straight. I'll summarize this in a very crisp manner. What happens is, whatever ITC is appearing in 3B of your current period will come auto-populated in this table. That is for sure. And that needs to be reported breakup compulsorily in these tables. Number 1. That is clear. Now, whatever has been reported here is going to flow to my table 8, which will reconcile with table 8A. Okay?
Yes, sir.
Table 8A is nothing but all the transactions appearing in my GSTR 2A or 2B at a cutoff date for financial year 22-23. Okay. So now what is happening is, ITC of last year, that is 21-22, you have taken in 22-23. Okay. Now this credit we are talking, there can be multiple aspects you have to look. When is it accounted? Number 1. When it is accounted, you have to see. When is it appearing in 2A also you have to see. Okay. And when did you avail this in 3B also you have to see. All the 3 aspects will help you determine. So there can be multiple permutations and combinations. How? Accounted last year, availed, appearing in 2A last year, availed in current year, one instance. Next, accounted in current year, appearing in 2A of last year, taken in 3B of current year, another instance. In all these instances, the disclosure may require a different reporting in this particular table. It is very difficult for me to give a straight answer stating for all of this, because it really requires a proper interpretation of that. Is your amount material that you are reporting of this type? Jayashree?
Yes. Yes.
Is the amount that you're reporting material here?
Yeah, sir. More than 10K.
Okay. Probably you'll have to share that circumstance. As I said, no, these all parameters needs to be analyzed. When is it accounted? When is
Yes, sir. I have accounted in previous year and 2 years also in the previous year. But in 3B, I have reported in current year, sir.
then you'll have to take it as far as my interpretation says, you'll have to disclose it in one of these tables here on the top. Breakup,
Okay.
you'll need to give input service and capital goods breakup. All other ITC only, no, you have taken.
Yes, sir. All other ITC.
You can disclose it in one of these 6C, 6B, 6C, 6D, 6C relating to what it is. 6B would be the ideal place where you'll have to report.
Sir, can
you will see certain implications of it, but I'm not sure how to explain you. So if you report it here, again, when you go to GSTR 9C, there will be one table that will keep coming. I think I'll address that issue, Jayashree. I'll park that for some time. I'll come to that question for sure. Let me run through this presentation. I'll run through the 9C, and then I'll take your questions and I'll answer them.
And one small doubt, sir. There is a difference between 8A and 2A, sir.
Everybody is having that. So
what we have to do, sir?
What you have to do is you have to reconcile at the end of the day. Why is there a difference? This is what even department wants to know. So this sounds to me like one of the anchor in a television says, no, India wants to know. So it's like that. Department also wants to know why is there a difference in 2A versus.
Actually, in the column of 8A, we are getting like what the input available in 2A, no, sir.
There is a deadlock. What happens is if there is a provision which is speaking something else and the 8A is getting, you will have to justify that to the department at a later point in time. Or you see to it that your workings are prepared in a different manner. That you are. I mean, it's basically you prepare some justification and this thing, and you can attach that with the GSTR 9C. When you're filing 9C, it will give you options to upload the additional information. So prepare your workings and upload that in the 9C. So it will be a clear-cut compliance from our end. No? We can use that against the department whenever it comes.
Yes, sir. Like that, we have circumstances. Like we are not getting into it, but it is reflecting in wages.
Understood. We can try to identify the root cause why it is happening like that.
Okay. Okay, sir.
So now, coming to the next part, 10, 11, 12, and 13. These are, as I explained in the Excel sheet, 22, 23 related transactions. 22, 23 related. If you have reported in April 23 to October 23 returns, then those will come and be reported in this particular table. That's why in the input requirement, I have mentioned that you extract GSTR1 from April to October 2023 also. Okay. Next, reversal of ITC, same way, like of 22-23. If you have done the reversals in the next GSTR 3B returns, reported here in the table number 12 and availed here, availed and reversal. Now let's look at what is the notification is giving a relaxation here. For financial year 22-23, additions or amendments, if any, to the supplies declared in the return of the previous financial year. But the amendment was furnished in table 9A, 9B, 9C of 1 April is filled up 30th November. Okay, that is what it is. Nothing changed. What has changed here is this thing has changed actually. 30th November, which was there in 21-22 also. This date was earlier September 23, which is now 30th of November 2023 as per the latest amendment. Okay. So this particular table 10, 11, 12 and 13 is nothing but last year transactions reported in current period. That is what it is. Here also same, October filled up to 30th of November. This is the only change that is going to be there. Next, this is optional. If you want to report, report. So you can say that, sir, I'm having the refund. I'm having the demand. No doubt that this particular table may be applicable to you, but still it is optional. So you just see that for financial year 2022-23, the registered person will have an option to not to fill the table. Okay, it's all up to you. Again, a suggestion, please fill if it is there. Next, supplies received from composition, deemed supply, goods sent on approval basis but not returned. Answer to this again, optional. If you want to fill, fill. If you don't want to, this is optional as per the notification. HSN outward, mandatory. Inward, optional. Many of them had a doubt regarding HSN summaries. So for financial year 22-23, HSN outward is mandatory. For inward supplies, it's going to be optional still. That is about GSTR 9 template. Anyone has any doubts in this now? What's the time? Oh, it's 5:15 already. Okay. Let me do one thing. Let me quickly move on to the reconciliations part. There are multiple reconciliation, guys. Let me tell you, there will be enormous amount of reconciliation that you have to do. It's not possible to cover all of it in this session. I will give you a brief insight, but they will be, I mean, within our organization, we basically categorize that as like this. One is external, 1 minute. One is external reconciliation, and another is, we call it as internal reconciliation, is what we term it. Now, when it comes to external reconciliations, basically we mean to say with books of accounts, that is financial statements versus returns versus GSTR 9. Okay. Internal reconciliation means within GSTR 9 also there will be multiple reconciliations or checkpoints that you have to keep, and 9C also you have to keep a check. Sounds clear? Now, what are those type of reconciliations? If you look at, I have categorized it here. 1 moment. For you, if you look at these books, okay, breakup of revenue from operations with ledgers, you should perform that reconciliation. Ledgers with sales registers, please do that. Once you're done with that, take these ledgers and do the reconciliation with the GSTR 1. And also you do that with the GSTR 3B return as well. So this is how you should do the RICO. Next, so if I talk about GSTR 1 should be reconciled with ledgers, 1 should be reconciled with 3B, 1 should be reconciled with GSTR 9 auto-populated. Okay, GSTR 9 comes auto-populated. Please do the RICO of that also. GSTR 3B, again, there is a data in that. Do the RICO with the books, do the RICO with the 9, do the RICO with the GSTR 2B. Okay, then taking 2B as a basis, 2B, you're already doing a RICO with 3B, do a RICO with books and do a RICO with table 8A also. Probably everyone must be thinking, how many RICOs are we supposed to be doing? These are all the RICOs that we are supposed to be doing. Why? Because every data that we are talking about is coming from a different source altogether. 3B is something based on our inputs, what we have given into the 3B return. Books is based on what has been accounted. So when you're doing a RICO of 3B and books, you will get to know either of the following, like, either if we talk about 3B is incorrect. So there can be two instances. One is input has been excess availed, input has been short availed. Or if we talk books are incorrect, then there will be again two scenarios: under accounted or over accounted in the books of accounts. That can be the scenario. So these are the things that will come out when you do 3B versus books. Now, when you're doing 3B versus 9, so it's the issue with respect to auto population, if at all there is any. Very remote chances that there will be a difference between these two, but it is important. Next, when you're doing 3B versus 2B, you will get to know transactions appearing in 2B So they can be again same. Excess availed in 3B when compared to what the transactions short availed. 2B transaction is either appearing or not appearing in the 2B. That is what is going to come out from this particular reco. Okay. Next, 2B versus books. Why should I do 2B versus books? Again, same thing. Transaction accounted in books but not appearing in 2B and hence ineligible as per the provisions of section 16. Like that it will come. Then appearing in the books, not appearing in 2B. Appearing in 2B but not accounted in the books. It will give me an impact in GSTR 9C that this is appearing in 2B. I have taken the input in the 3B, but I am not accounted in the books of accounts. So it has been accounted in the subsequent financial year. You're getting my point, everyone? In the chat box, can you please message why I'm trying to explain that for each reconciliation, there is actually varied reasons. We are confused how many reconciliations exactly we are supposed to do. Why am I even supposed to do that many reconciliations? And the point is, for every transaction that we are talking about, the data is flowing differently. And from each RICO independently, you're getting a different reason that will help you decide where exactly you are going to give the impact. So one versus ledgers, if it is there, then what can happen? Not reported in 1, report it in 9 and pay through DRC 03. That will be the answer. Okay. Next, 1 versus 3B. 1, it will be like where it is incorrect. Is 1 incorrect? Paid in 3B. Then I don't have to pay again. I have to only disclose it in 1. Getting my point? That's how your systematical answers will come to your questions when you do these multiple reconciliations. Is everybody clear? Everyone, anyone has any doubts? This is very, very important. As I said, 70% of our 9 and 9C depends upon these reconciliations. These are all called as external reconciliations. Just to remember, we call it as all external reconciliations. When I talk about internal reconciliations, I'll come to that. Actually, I'll show you that with the format only. So let me just move to the next slide. Key pointers, guys, please make a note of these pointers. There are very few, but very important. Any errors committed in 1 and 3B can be corrected in annual returns. Okay. Number 1 point that you should understand. Next, any short payment or excess ITC that you have availed in 3B, they can be disclosed in annual return and paid or reversed in DRC 03. So you cannot reverse ITC directly through GSTR 9. Remember that. You cannot pay excess liability, short liability if any paid through GSTR 9. You can only disclose that and support it with DRC 03. Next, any short ITC which you have availed, you cannot avail that with GSTR 9. So if you simply go and put it in table 6, this is there as per my books of accounts, it will not allow. Remember that. Next, annual return should duly reconcile with books of accounts. This is what we have been discussing. Next, person with multiple GST and a turnover exceeding 2 crores, he must file nil return if the transactions are nil. This we discussed. 5 registrations, 4 are accounting for 9 crores, 1 is accounting for 1 crore. What should I do? You have to file 9 and 9C for all of them. Okay. Now, this is very interesting. Whose registration has been cancelled. Let us say a registration has been cancelled. Sir, registration is cancelled. Are we still required to file GST 9 and 9C? Answer is yes. You have to file. If your final return has been filed, probably at that time the officer must have already asked you to file 9 and 9C and then go with that. Ideal scenario, I'm saying. Okay, practical difficulties can be there, but if a registration has been cancelled also during the particular period, please ensure. So there will be instances we came across where there are 15 registrations. 4 registrations were cancelled during the year. We have to file the 9 and 9C for them also. Remember that. If not, 100% you'll get a notice stating that you have not filed the GSTR 9 and 9C. Next, is it clear? Want to take a screenshot, make a scribbling on your pad? I'm coming to the most important part, huh? So please be connected with that. Now let's see certain technical updates. Very easy, nothing complex. It will be done within few minutes. Now, first of all, HSN summary table 17. Till last time, those who have a hands-on experience, we were facing issues with respect to giving the negative values. So that is now allowed in the HSN summary because there could have been excess returns when compared to the outward. So you can report negative values also in the HSN summary. This is one of the most important. I have not tried it. If anyone has tried it, please confirm if you are able to do this. But my understanding says that till last year, when we were reporting HSN summary, he was calculating to the 0.005 rupee paisa also validation. So with this change, I think they have removed this validation part, and they will allow us the numeric validations without paisa. Is it true? Anyone has tried that HSN summary validation? So I may extend the okay, sir. Yeah, clear, sir. Yeah, fine. I may extend the session for 10-15 minutes further to just cover certain more important aspects. Okay. Next, a new validation check has been added. They will see CGST and SGST is 100% matching or not. It cannot be like 100 rupees CGST, 90 rupees SGST. If you report that, then the validation will fail. And the table 14 will come auto-populated from current year. So if you are reporting anything in table 10 and 11, okay, 14 will come auto-populated and you have to fill up that paid column. So these all are yet to be validated. These are there in the written templates is what we have seen till now. So 22-23 has been added, which is fine. In the GSTR 9C, one key change is that they have added 6% as the tax rate. Apart from that, there is no major change as such in the GSTR 9C. With respect to this one, probably if you are facing any, have you ever faced any issues with 9 and 9C? If you tell, I can answer your questions. How to report. This is completely based on the disclosures only. Okay. How to handle the variations between 9 and 9C. So majorly, if you are coming across, there is this thing called reasons. So you can go and report everything in the reasons if there is any variation. This is only for input. This is not a part of the session. You can make a note of this. So these are certain transactions that is recommendatory for all the assessees that they should review their financial statements, their trial balance. They should review all their activities and the transactions that have happened for financial year 22-23 to check if there are any ineligible credits that have been accounted for appearing in 2B and taken in 3B also. Go ahead and reverse that via DRC03 and report it in GSTR 9. Specify the reasons in GSTR 9C. That is the best practice that you can do. And it has really helped to many of our clients also, wherein we assisted, where GST audit was there, but we were in a position to explain them with evidences stating that, see, this is what we have reported it in 9C also. So that was a bit easy going that way. So key transactions, review 17.5 number 1. I'll make it faster from here. And review the disclosure and the GST treatment of other income like fixed deposits, miscellaneous write-off, rental incomes, recovery of interest for delayed payment, compensations recovered, etc. Please see what is the GST implication that has been given on those kind of transactions. If it is not reported in 1 and 3B, then please consider that report it in 9 and pay the necessary taxes in the DRC03 in the current financial year. Next, review what are the triggerers of ITC reversals. 180 days, please go and ask for vendor aging report. If it is more than 180 days, if you many of the assessees have missed reversing that credit, so please reverse that credit via DRC03. Report it off in 9. Clean your hands and say to the department that we have complied with that, like that. Then job work, if you are involved into 1 year and 3 year criteria for being eligible for the input tax credit, you have to get back within that prescribed timelines, and reversal of common ITCs. Please pay attention to these kind of reviews also when you are doing that. And the importance is is basically these two main reasons: departmental audits. So what is happening, to give you a insight, if there are more than 3 to 4 variations or differences appearing in 9 and 9C, it is going to the vigilance investigation wing. Okay, and if it is less than that, then it is going to jurisdictional offices. That is how it is happening with respect to the what do you call, scrutiny of the returns and all. Okay, so you have to ensure that the number of differences are to the maximum possible level, is within the control only, with appropriate disclosures. So please ensure that part of it. Okay, invites departmental audit. Scrutiny of returns can be an issue, and you should ensure that your 9 is going in a smooth manner with sufficient documentation. Prepare your workings. See, we all have to agree to one fact that 9 and 9C is majorly a disclosure table. It is the information that is being passed on for the assessments to happen. So always our objective is that at the time of assessment, what is it that is going to happen? So whatever you're disclosing, if there are any differences also, don't worry. Prepare sufficient workings with documentary evidences, so that when they are getting a notice, you have to just submit that particular thing to them. So in that manner, it will be safer, not a challenge as such. So this is thing. Let me just run you through the 9C template also once. Then I think we'll be over for the day with this session also. And I will then answer all your questions, which I am sure many of us are eagerly waiting for to shoot out the questions. I'm sure many of you must have had a look at 9C templates. If there are any required to disclose of 3B, 4B2 and 4D1 information as of March 23. I didn't get your question, sir or ma'am. Actually, in this, if there any required to disclose 3B, 4B2 and 4D1 information as of March. Sorry, I didn't get your question. Probably I'll allow you to unmute yourself and explain, so that it will be easy for me to understand. Yeah. So this is one of the tables of 9C. No major changes. That's why we didn't see much in this. So this is a reconciliation table of turnover as per audited financials. Here it will come. Let me just zoom this out. And now you see this. So here you'll give this figure, this table number 6. This should match with my profit and loss. Okay. Any adjustments you have to do, you disclose it in this here, this area. And this is the residual category 5O. Okay. So if there is a difference between P&L and GST returns, GSTR 9 and all, you can give the reconciliation here. And even if after doing there any difference is there, then unreconciled turnover, let it be here and give your reasons here in the next table. Okay. Part 7, this is for the taxable turnover we are arriving. So this will come pre-populated. Which one? 7A. 7A will come from here, 7R, 5R, sorry. And you give a breakup here and you give the turnover in the GSTR 9. Now, here is a thing that you need to understand. Now, in this 5Q, this figure is there now, this one. Can you see this? 5Q. This is coming from my GST 9. This is what I'm calling it as internal reconciliation. So this figure, it should match with this figure here. This is what is called, what I'm meaning as internal reconciliation. The total turnover, this one. So the 5N will come in the 9C here. Then in this table, that is 7F, it will come from table number 4, that is from like this total minus this inward supplies and advances. He will eliminate. Now this is what is called as internal reconciliation between 9 and 9C also. The figures should match, basically is what I mean to say. Now if you go further, you'll see that this is a rate-wise liability. Now what many of the assessees are doing, let me tell you. They're simply giving the data of this is the 5%, this is 6%, 12%, 18%, etc. But remember that this total taxable value, this total turnover that is there, it should match with this turnover, taxable turnover as per 9, the table 7F. Because we are basically this format is such like this. First, government is asking what is the turnover you reported in profit and loss. We are saying this is the figure. What is the figure you have reported in GST 9? This is the figure. Okay, so government is like out of this much, this is the total. So you have reported all the turnover, whether taxable or not taxable, everything. After that, in this table, he's saying, okay, out of total, how much is your not taxable turnover reported here? So we reported this here. So what he did from the total turnover, he removed what is not taxable and he reported what is taxable. So next table, he's asking on this turnover, please tell me what is the breakup in the rate wise, how much you have reported. You are understanding the flow, that how he has beautifully designed this 9 and 9C. If you understand in the right way, this is what is the ultimate purpose. State officers might not be able to understand this level, but we as a professionals and being from the industry background, we have to know that this is how the actual thought process is of this design. Okay, then when we give this table here, the breakup here at the bottom, he will ask in GSTR 9 how much did you pay. This figure should again 100% it should match with table 9, this figure. Okay, now when you have reported here, these figures are he's matching with 3B paid figures. This is as per 3B, means this is already paid in 3B, and then he's asking comparing that much. If it is already paid, well and good. Now this he's reconciling with the taxable turnover. Understood my point, everybody? The flow and the concept, the mechanism that with which this has been designed is this, and this is what is expected for us to understand how you are able to correlate the tables. What is the storyline behind 9 and 9C, how it is impacting. Okay, next comes the this is additional amount payable, if any, then you have to pay that. ITC reconciliation, what is there as per books of accounts, last year booked and you are taking it in current year, something of that type, and then you give a reconciliation here. If there is a gap in the reconciliation, give the reasons in the unreconciled differences. Then this is an optional table. Again, let me make it very clear. This is an optional table still. So if you want to report, or else you can leave that. People are still confused. Many of them are reporting here if the transaction value is more than 10% also. So that is a conservative view that you can take. Okay. So if the value of your expenditure is more than 10%, please report it. Like purchases, you can report the value, report that value here, and go ahead. And yeah, unreconciled liabilities, if there are any, you have to pay it in this tables. And part 5 is a additional liability due to non-reconciliation, guys. So with that thing, I think you got a fair understanding about the storyline which I wanted to actually explain you guys. Anyone has any doubts now, please tell me. Were you able to follow the things? The floor is open for discussion now.
Yeah, participants who are who wants to speak, kindly raise your hand such that we can allow you to speak.
So those who actually what we'll do is I'll call off the session. Then what we'll do is those who want to probably drop out, you can drop out. And those who have any questions, probably you can stay back. I'll be there here for next 5-10 minutes. We can have a conversation there. And in the meantime, thank you everyone, first of all, for participating and listening to this session. I really understand that we all are working together, and 9 and 9C, we are filing for all are assessees and etc. So we all are on a same mission as such, strictly speaking, that we want to do a proper compliance and report it to the department. And I think we should slowly start looping in the department also to work in a collaborative manner, that whatever we are doing, they also understand and what we are understanding. So with that thought process is what we've been working, and we have tried to come to this understanding. We have spent a lot of time in understanding the rationale behind 9 and 9C. Okay. I'm more than happy to be addressing here at FTCCI. Once again, thanks to Irshad sir and even Lakshmidhar sir for coordinating on this and giving me this opportunity of being presenting here. So those who are, I know we are running out of time, and if you want, you can connect with me. Either you can reach out through FTCCI. I'm a member of FTCCI in which ways. So the details are available. The firm name is displayed and you know it. So you can connect with me on LinkedIn also for that matter. And those who have doubts, please stay back, and all others, you may please carry on with the existing works. And thank you so much once again. Probably more sessions will be coming up with GST and 9C as well. Thank you so much for that.
Yeah, PPTs will be shared after the session. No need to worry.
Yeah, PPTs will be shared, I believe. And now, those who have any doubts, please unmute yourself and please go ahead with that. I'm having a look at the chat box also. Rukmani says, cleared, sir. Representative from Nile Limited, probably if you can unmute and explain what are the amounts to be disclosed under non-GST inward supply, sir. So it's an optional table as such, but everything will come in that. Everything, any transaction which is you're taking is a non-GST only. Like if you talk about non-GST, first of all, Schedule 3 transactions all will come under non-GST. High C sales transactions come under non-GST. Petrol, diesel, etc. Whatever you're purchasing is outside the scope of Section 9, that is charge. So that will also fall in non-GST only, which we have to be deported. Employee and all, it is a question mark. It is not considered as a supply itself, so it will not come in the non-GST supplies. What is my view? I don't know about the. I cannot comment upon other views or the departmental view. My view is that that employees won't come. Okay, accounts nicely explained. Thank you so much, sir. Rajkumar, thank you. Suresh, thank you so much. Contact details. I think. As I said, you can obtain, or else you can connect with me through. I think I'll just display the number if you want to connect. Yeah, I think the number is available. The address is not High Tech City. We are stationed at Khairtabad. If you have any doubts, thank you so much. PPT will be shared. Thank you so much. PPTs will be shared, everybody. In hospital industry, inpatient. Mohammed, can you unmute yourself and explain, so that in the interest of time, I'll explain it to you. But we are disclosing personal cost also under non-GST. Personal cost you cannot account for at the first place as per company law, Rukmani. So the accounting level only there is an error, I believe. So that is something you have to address. Yeah.
As far as no question, no person has raised it, sir. I think they got clear.
Yeah, I think so. I'm not sure. There can be two reasons to it. Either my explanation was very fantastic that everybody loved it. Second is everybody is either tired now and they are like they'll connect at a later point in time to get back to me.
We are receiving more positive responses in the chat box as well, that it has been went very well.
Which is really great. I'm glad. I mean, I have put in all my hearts, honestly speaking, to explain at the best possible. So that's the thing. Of course, not 100% must have been covered, but this is what I can do in 1.5 hours time and keeping. Yes, of course, doubts will keep coming when you start filling up the formats, of course. And there'll be many, many permutations and combinations also for that.
Yes, sir. Okay. We sincerely thank you, sir, for empowering the participants on latest updates of GST annual returns and reconciliations by taking the session. Thank you very much, sir.
Pleasure is all mine, sir. Thank you so much for having me here. All right, then we can call off for the day.
Yes, sir. Thank you, sir. Thank you everyone for joining the session. Whoever are non-members of FTCCI, kindly become members and get the benefits of the from membership department. So